Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
Chapter 7. Other Business Expenses. In this chapter, we will take a look at several more types of costs that businesses incur, as well as looking at how the costs may be recovered by the business. As we have seen, certain business expenses may be deducted in the year that they are paid, while other costs must be capitalized. Carrying charges are certain fees for insurance and taxes that a business pays in order to carry, develop, store, or transfer property over the course of the year. Most carrying charges must be capitalized. Some charges are deductible. A taxpayer should use the Uniform Capitalization Rules as well as IRS Publication 535 in order to determine if a charge is deductible or must be capitalized. For example, if a carrying charge is considered interest, use Chapter 4 in IRS Publication 535 to determine if the expense is deductible. Research and experimental costs are reasonable costs incurred in a trade or business for activities intended to provide information that would eliminate uncertainty about the development or improvement of a product. In other words, any reasonable cost that a business incurs while researching how to create a new product or improve an existing one are considered research and experimental costs and would be deductible as business expenses. Research and experimental costs might also include expenses incurred in order to formulate products, inventions, patents, processes, techniques, and so forth. Certain expenses are specifically not deductible as research and experimental costs. These non-deductible expenses include consumer surveys, management studies, quality control testing, the acquisition of another's patent, and research in connection with historical projects. Generally, research and experimental costs are capital expenditures. However, a business may elect to take a current deduction for these types of costs. If a business owner decides to take such a deduction, then the business must deduct all such expenses for all future years unless the IRS grants approval to allow the business to consider the cost capital expenditures. Likewise, if a business elects to capitalize such expenditures, then special permission must be obtained from the IRS before that business may take current deductions.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.